Looking for strategies to help you protect your portfolio in these uncertain times? Visit robblack.com. robblack.com, powered by EP Wealth.
Good morning, and it is a good morning on Wall Street as well. The S&P 500 up 62 points, up 1%. Getting stronger as the morning goes on. The Dow Jones Industrial Average up 391. That's up just under 1% to 46,733. The NASDAQ up 315. That's up 1.4% to 21,905. Russell 2000 is up 1.5% to 2535. So all winners today. The VIX is going lower to 23. Telling you volatility is coming down. Anxiety is coming down. Gold's moving higher. We're back to the February stock market where things are moving towards records. Will it hold? We have a big story for you to unfold today. The 10-year Treasury sits at 4.29%. Nike stock plunges to an 11-year low. Ouch. Talk about that in just a minute. Apple turns 50 years old today. Belgian court has ordered Poland and Romania to buy $2.2 billion of Pfizer COVID vaccines. Sometimes these business stories just make me go, I don't even know if I can go down that road. IRS staffing is down by 27% this year. A lot of Doge cuts going on there. The S&P 500, the NASDAQ, and the Dow see a nice extension of yesterday's geopolitical-driven rally. President Trump is going to address the nation tonight at 9 p.m. Eastern, 6 p.m. Pacific. Further clarity on a potential off-ramp to the conflict with Iran. Oil prices are moving lower again today, which boosts sentiment. Even though gas prices in the United States have hit $4.02, a record high from, not a record high, but a high level since over the last 4 years, highest levels over the last 4 years. The Financial Times reported that the UK will hold talks with 35 other nations regarding a coalition to reopen the Strait of Hormuz. The energy sector is an early laggard again today. Strength is relatively broad elsewhere, with only consumer staple sectors facing pressure. Mega cap and tech stocks are off to another solid start, pushing the communication services up 1.6%, and information technology sectors near the top of the leaderboard. Semiconductor stocks, in particular, are mounting a solid advance. Yesterday's move in stocks and bonds were a preview of what we may see when the conflict really does end. The March ADP report came in stronger than expected this morning. Positive signal for jobs market ahead of Friday's non-farm payrolls report. When I just said that statement, I was like, wow, it's a new month already. Glad March is gone. Go away, March. In with April. I saw a new study on how much money Americans say they need to retire. $1 million is not enough. Last year's number of $1.2 million is not enough. Because of inflation, fears about AI's impact on jobs and increased longevity, we're living longer. It pushed expectations higher on the magic number. That magic number now, $1.46 million, $200,000 more than last year's inflation increased longevity, and fears about the impact of artificial intelligence on jobs have raised financial anxiety. According to a study by Northwestern Mutual, Americans' heightened expectations for how much they will need for retirement come as actual retirement savings remain a fraction of that goal for many. 46% of Americans said that they don't expect to be financially prepared for retirement. I'm having a Pints and Portfolios Saturday, April 18th, where I'll buy you the beers and we'll find out if you're financially prepared for retirement. We'll do a preliminary report for you afterwards. I'm bringing 2 CFPs with me. I buy the beers for basically 15 people. Seats are limited. It's 11:30 to 1:30 in Sunnyvale, California. It's a great opportunity to find out where you are. Energy stocks are tumbling today, and chemical stocks as well. Growing expectations that the U.S. participation in the Iran war is nearing an end. West Texas Intermediate crude oil futures slipped below 100. So you're seeing names like CF Industries down 3%, Dow Chemicals down 3%, LyondellBasell down 4.6%. natural gas drillers like EOG Resources, Devon Energy, Coterra Energy, Diamondback Energy down 3% all. It's interesting because Iran did a lot of damage to a natural gas field that's going to take 3 to 5 years to get back online. It provides a lot of the natural gas to the world. Oddly enough, this war is going to be a financial boom for the United States because we have extra oil and we have extra natural gas to send to the rest of the world. Now, not only is energy and chemicals weaker, but the data center trade is rebooting amongst this relief rally. Names like Micron up 10%, SanDisk up 10%, Western Digital up 11%, Seagate Technologies up 8%. The Wall Street complex is saying we've seen the white of their eyes. It's time to invest. I believe that too. Could there be more down days? Yes. But with the president speaking tonight, I don't think he's going to get on television and say things are going awful and we're going to be stuck here forever. I don't know if a deal's in place, and that could complicate the next couple of days. You're seeing not only Micron, SanDisk, Western Digital, Seagate, but you're seeing names like Ciena, Arista Networks, Corning, and Coherent all up 3+ to 5% plus in trade today. NVIDIA up 1.3%, Intel up 9.7%, Micron up 4.2%. Lam Research down up 4.4%, KLA 10 core up 3%. So it's the whole enterprise. Even the guys who make the AI data centers, like Comfort Systems that does the cooling, up 4.5%, Carrier up 2%, Quanta Services up 2%, server rack companies like HP up 1%, and Dell up 3%. It's nice to see. Clearly, there's a big element of the relief rally at play in the early bounce. Now, not all stocks are up today. Nike is at an 11-year low. You can say it with me, boo. The quarter beat on headline revenue and earnings, but it's still issuing weak guidance. They still have problems with inventory growth in North America. It's a company that still firmly is in the midst of a reset with near-term headwinds intensifying before conditions improve. At some point in the next 9 months, it's going to be a heck of a buy or a heck of a trade is what I want to say. Management is taking the right steps, cleaning up inventory, refining distribution, and resetting key internal markets. These efforts are weighing heavily on current performance and will take time to materialize into tangible growth. The deeper than expected decline projected for Greater China and the continued weakness in sportswear raise concerns about demand elasticity and brand momentum. Although Nike is targeting completion of its Win Now initiatives by year end, the path to consistent growth remains uncertain. Until clearer signs of stabilization emerge, particularly in China and lifestyle categories, the stock may struggle to regain investor confidence. There is the 2028 Olympics coming up, and they have been doing a lot of innovation. But from a brand perspective, my kids won't wear anything that has a Nike swoosh on it other than shoes. So their design fashion isn't the world's design fashion, but athleisure is a very broad category with many players. And athleisure's declining right now with the pickup of denim jeans. Big turnaround going on at Restoration Hardware. It's a luxury home furnishings maker. They fell short on a key metric in its fiscal fourth quarter, and its current quarter guide was too light. Tariffs were a drag. The housing market's not seeing a lot of buyers right now, so people aren't putting new stuff in their homes. Shares are down 18% today. Ouch. Wells Fargo hiked the price target on ARM to 175 from 165. They're excited by ARM Holdings push into the data center CPU market, making their first semiconductors themselves versus licensing their technology. They, being Wells Fargo, reiterated their buy rating. It seems like that story is getting better and better. Now, Intel is soaring today, up 10%. They're spending $14.2 billion to take back full ownership of a manufacturing facility in Ireland. Investors appear to be viewing this measure as a concrete sign that Intel's turnaround plan is entering a new phase. a growth phase powered by AI after years of sluggish sales that made them focus on cost controls. Chipmaker had originally sold a 49% stake in the fab to Apollo Global Management in order to raise cash for other investment opportunities. So they sold it for $11.2 billion. They're buying it back for $14.2 billion. Interesting. And Wall Street's excited by that. Modelo Brewer, Constellation Brands, is getting added to Evercore's tactical buy list. It's been a tough stock to own. Can it turn around? Beer sales are getting stronger in the United States right now. Citigroup, or Citi. I don't like that name change. I like Citigroup. But Citi upgraded it last month. In the world of automotive, NIO and Li Auto are rising today as first quarter delivery totals beat internal guidance. China's EV startup NIO, ticker symbol NIO, up 1.6%. Li Auto up 3.3%, XPeng up 2.7%. If you go to YouTube and search China's EV luxury cars, it will blow you away. A, how nice they look, and B, how competitively they're priced. Now again, Canada is opening up their market to Chinese EVs. The United States is not. That would be a number one reason for me to move to Canada, because that's kind of cool to see. I don't know if you're with me on that one, but I'm not a car guy either, so that's a weird thing for me to say. Edwards Lifescience was upgraded to buy from hold over at Wolf Research. Ultimately, the analyst said that Medtronic had a data flop. So heart valve replacements. Edwards Lifescience has been not a great investment. It's not a stock that I follow closely, but I see the headlines. Now, we get the jobs report on Friday, but we're also learning that American farmers plan to plant less corn in 2026. And they're blaming the Iran war. American farmers plan to plant just 95.3 million acres of corn, down 3%, and 84.7 million acres of soybeans, up 4%. Rising energy costs from the Iran war have increased nitrogen fertilizer prices, making corn even more expensive to grow than soybeans. Just a financial decision there, huh? Now, if the Iran war gets tougher or it escalates, these numbers could change. Almost 3/4 of U.S. workers think now's a bad time to find a quality job. The Great Resignation, when millions of Americans quit their jobs during COVID in pursuit of greener pastures, now feels very long ago. Confidence in the job market has sunk in recent years per a new Gallup workplace survey, with only 28% of workers saying that now is a good time to find a quality job, down from 70% a little under 4 years ago. That's discouraging. I've got two kids. They'll be, I guess they're 15 and a half and 17 and a half now. They're getting closer and closer to that work market. College-educated workers, a group that had been slightly more optimistic than other demographics until last year, now feeling particularly pessimistic, with only 19% of respondents saying that now is a good time to find a quality job, compared with 35% of workers without a college degree. 19% of college-educated workers. That's grim. It seems more likely the malaise could be a reflection of weak hiring across white-collar fields, concerns about AI automation, and high-profile layoffs in both the private and public sectors. March's Conference Board report had the highest share of workers still seeing jobs as hard to get. Let's take a break here. I'll go collect some more data, some more insights. I'll come back and feed them to you. Patrick O'Hare's coming up next, and then after that, I'll do a big wrap-up. Can't wait to chat. Meet you at a live event, Pints and Portfolios, Saturday, April 18th, 11:30 to 1:30 in Sunnyvale, California. You show up, I'll buy the beer, we'll talk financial planning. Are you ready for retirement? Do you have that $1.4 million? And do you feel comfortable in the current market conditions? We'll find out. Find me online at robblackshow.com. That's robblackshow.com.
Join Rob Black in Sunnyvale Saturday, April 18th for Pints and Portfolios, a less formal event at a local watering hole for those close to retirement with $500K or more in investable assets. Drop by from 11:30 to 2 for a little sunshine and a complimentary preliminary financial plan from a CFP that Rob trusts at EP Wealth Advisors. Whether you're on the road to retirement or already there, this preliminary plan can provide you with a second opinion analysis of where you are and highlight areas for improvement and opportunities for growth. That's Saturday, April 18th in Sunnyvale. Go to robblackshow.com and click the Events tab. Find Pints and Portfolios and click to register. You'll answer a few simple questions about your situation, and your confirmation email will provide all the details on the location of this Sunnyvale event and how to schedule your preliminary financial plan. Space is limited and registration is required, so go to robblackshow.com today. That's robblackshow.com. Investments not FDIC insured. Past performance does not guarantee future results. Not an offer to sell or a solicitation to buy any security. Member FINRA SIPC.
Joining me now from briefing.com, Patrick O'Hare, a reliable source of domestic and international news that you can use. Markets turned on a dime yesterday. There's a lot to talk about. Is it something we can trust? Is it something that we feel comfortable with? Let's start by asking Patrick. Mr. O'Hare, welcome in and good morning.
Hey, good morning, Rob. It's good to be back with you.
What do you think about current market conditions?
They're volatile, and certainly what we got yesterday was timed in a number of respects. Briefing.com had posted a column to the big picture in early March suggesting some levels where we might see an off-ramp to this Iran war. And one of the levels we identified was the national average for gas prices having a 4 handle on it, and we got to there. Another level was the S&P 500 at 6,300, which would mark a 10% correction from the high. We just about got there. And then we identified 4.5% as the 10-year note yield as another red line, and stopped just short of that. But in any case, we got to close to a number of those levels that were creating some dislocation within the market that we thought the president wouldn't want to see get any worse. So we had that going for us. And then on top of it, you just had a market that was certainly oversold on a short-term basis coming into the end of the quarter. So good time to do some rebalancing. And so it responded more concertedly to the president's assertion yesterday that there could be an end to the war soon. But I think as your lead-in suggests, it's not just what we saw yesterday, which was clearly a very good price performance, but what's important is to see now how the market digests all this in the coming days, because there's still no clear sense yet that Iran's leadership is ready to be done with this.
So what I'm saying on television and radio to my audience is something along the lines of, this is why you don't get out of the market. In conflicts in the Middle East, history has taught us that when it's over, there's a snapback, that you shouldn't have that much worry, maybe longer term if oil stays at $100 a barrel for a month or 2 months. But these tend to be shorter affairs. Am I misleading people on the risk?
No, you're not, Rob. And I think maybe the one important caveat to all that is where someone is and when they might actually need the money they have invested in the market, right? Certainly for a long-term investment, patient-minded investor, I think you're spot on, right? You don't react to these types of situations by getting out of the market entirely because you're fearful of them. History is littered with examples of geopolitical events that create some upset, but then ultimately you see the market regroup as earnings, regroup as well. I guess we could say that ahead of this action, an S&P 500 that was pretty much at a record high. And we all know what we've seen in certainly since the turn of the century, how challenging some situations have been, namely the financial crisis and COVID. And we were at a record high a month ago. Yeah, it is important to know your risk tolerance and your time horizon. But in general, I think Warren Buffett would agree with you as well that you don't move willy-nilly on geopolitical happenings, and that it's always best to stay invested if you have the capacity to do so.
I can ask you about stagflation, but that doesn't feel right today. Maybe let's talk a little bit about Nike. I'm seeing in your page one report that they're still struggling with a turnaround. They've raised their revenues by 50% in the last 10 years, and yet their stock has gone nowhere. What are your thoughts on Nike, not necessarily as an investment, because I don't think that's what you do on air, but maybe fall in love with an icon and things change, and maybe that's why some people shouldn't own individual stocks?
And this is an interesting case, right? Because Nike is one of the great American companies, but it maybe is an example of being a great company but a bad stock. And they certainly have encountered new competition that's been successful in penetrating Nike's landscape and taking market share. And the company is working diligently to effect a turnaround, but it hasn't proven to be easy, obviously. It's one of those situations, though, where I think, again, time horizon sets in. There could be an opportunity cost by getting in too early with Nike if the stock's just going to be flat for another year or so. But again, history shows in most cases when you have these iconic U.S. companies fall on hard times, you get some new leadership in there, you get some restructuring activity, and then margins and earnings start to improve, and then the stock follows. And it's a name that one might want to leg into, but not necessarily go all in just yet. It's fallen to levels that seem attractive here for that patient-minded investor, but it's just obviously the company's own mission. They still have work to do, and it's going to take time to make their turnaround more successful.
So I'm looking at your page one at briefing.com. It's an article that you publish every morning. It's how I start my mornings on Wednesdays because I want to be a little bit surprised. You lean into a little bit about the ADP private sector employment report increasing by 62,000 jobs in March. How are you feeling about our jobs in the United States? Because that obviously drives our economy, and our economy probably drives our stock market more often than not.
And yeah, job growth has clearly slowed. A lot of that's been attributed, though, to the immigration crackdown as well. And even for the March payroll employment report we have on Friday, consensus estimates are revolving around about 60,000 in terms of an increase in non-farm payrolls, something similar for non-farm private payrolls. So pretty much in line with what the ADP report is suggesting today. I think in general, the market has come to accept that the labor market is in decent shape. It's just there's not a lot of hiring activity, but there's also not a lot of layoff activity either. And I think even some of the retail sales data we got this morning did underscore that consumers are still spending pretty freely on goods because that February data was quite solid in terms of the spending activity across various types of retail businesses. I'll be very interested to see how that March data plays out because clearly we, in a month's time, saw a big spike in gas prices, a big drop in stock prices, and that's likely to have a negative impact on consumer sentiment, certainly. But we're interested in seeing if that translated actually into lower spending activity. But from what we could see through February anyway, the consumer was hanging in there pretty good, partly because the labor market was still in a fairly solid state.
So as I typically do, I give you the final 2 or 3 minutes to softball it and say, what are you working on or what do you think we need to know? Because you've been in this industry as long as I have, and there's a lot of wisdom in your words.
Thank you for that.
You're welcome.
I can say that with this particular week, it's a Good Friday, the market holiday, I'm going to be delaying the big picture post until the following week. But with that, I'll be working on an earnings season preview. These turns come pretty quickly between the fourth quarter and the first quarter, but we're going to start getting first quarter earnings reporting coming out in mass sometime around the third week of April. And so I'll be doing a preview of that information. Right now, the outlook is pretty strong. Consensus estimate looking for around about 13 to 14% EPS growth, which is pretty great. And we'll see if these companies can continue to provide these upside surprises or maybe come in below that level. But it's interesting that despite everything going on with Iran, you had consensus earnings estimates for the S&P 500 continue to trend higher throughout the month of March. So it's going to be really curious to see what the guidance suggests about the achievability of those earnings estimates. But right now, the market seems to be trading with some confidence that those estimates will be met. And it just needs a resolution to what's going on with Iran to react in a stronger fashion to that possibility.
One final question. The Federal Reserve, they've been being thought of as maybe raising interest rates this year now, which is a shocker. Coming into the year, we weren't thinking that, but we also know that Jerome Powell's eventually going to step down, and that job is going to be replaced by someone who's more, let's lower interest rates. Where are you vibing? Where are you vibing on this? What's your thoughts? Because I think this is more a vibe versus a educated guess.
Yeah, I think the vibe is that the Fed would like to cut rates again under Kevin Warsh's leadership. Of course, he has to actually get confirmed. That's not a done deal yet. But I think also that his ability to not dissuade, but to convince other voters that the time is right to cut rates has gotten more challenging because of the spike in energy costs and the ongoing uncertainty about how quickly more normalized shipments can resume through the Strait of Hormuz. And that's a great uncertainty right now. And I think the majority of members at the Fed are still going to be inclined to sit tight, even with a new chairman coming in who might be pushing for more rate cut action. But it's going to be a high bar for that at this juncture anyway, unless we get a real rollback in energy prices here in the short term.
Sounds good. Thanks for all your help and always coming on the air and doing such a great job. Briefing.com, it's a reliable source of domestic and international news you can use. I start my day every day with it. He actually writes a column at the end of the week called The Big Picture. I check in on that as well. There's a lot of content to be had at briefing.com other than his. It's briefing.com.
This interview featured on The Rob Black Show is brought to you by EP Wealth. Learn more at robblack.com.
Some other stories to talk about this morning. But first, let's take a look at how the numbers are holding up after a couple hours of trading. They're going higher. Quite simply, they're going higher. The S&P 500's up 1% now. Sitting at 65.91. The Dow Jones Industrial Average up 85 basis points, 46,733. That's up 391. The Nasdaq's up 1.6%. Sitting at 21,950, and the Russell 2000 up 1.6%, sitting at 2536. Hope is growing that there's going to be an end to the U.S.-Iran war on the horizon. Some other stories out there for you. Yesterday, we talked a little bit about Delta Airlines tapping Amazon Leo for in-flight Wi-Fi starting in 2028 as streaming wars heat up with Tesla's Starlink. American Airlines is also considering Amazon's Leo as well. Amazon's content will also be shown on planes on in-flight entertainment. So that's an interesting upgrade per se. Right now, United and Hawaiian Airlines are using Starlink from SpaceX. SpaceX IPO coming up. There's a lot of weird terms on that. I'd be very careful trying to get an allocation because it's not lining up to be beneficial for the individual. It's lining up to be beneficial for Elon Musk and companies that have invested with him through the years. Formula One's not slowing down. The open wheel auto racing competition hit $3.9 billion in revenue last year, a 14% jump. 2025 was the most attended F1 season ever, drawing 6.7 million spectators over its 24 race season. One race, the British Grand Prix, drew 500,000 fans. NASA's sending the first crewed moon mission in decades. NASA's Artemis 2 mission is expected to lift off from Kennedy Space Center today at 3:24 Pacific time, carrying 4 astronauts on a journey around the moon. A historic and risky lunar venture. First-time astronauts have returned to the vicinity of the moon in more than 50 years. It'll be the first time. Wow. This mission is a critical test as we plan to eventually go back to the lunar surface later this decade. It's roughly a 10-day journey. It's expected to carry the crew more than 250,000 miles from Earth, potentially setting a new distance record for human spaceflight. They will be traveling farther from Earth than any human ever has. NASA invents a lot of technology that we use later, like memory foam, scratch-resistant lenses for our iPhone cameras, and water purification systems that are still used when there's a natural disaster and water gets contaminated and people need water to drink and to cook. You can watch the launch today on YouTube, or NASA has their own stream as well. Briefly, Apple turns 50 today. Its birthday is worth celebrating. The company was formed in 1976 by Steve Jobs, Steve Wozniak, and Ronald Wayne. Apple launched a slew of age-defining products in the last 50 years, really since 1984. The Macintosh computer, the iPod in 2001, the iPhone in 2007. The iPhone was an introduction of a touchscreen smartphone that was game-changing. Up until that point, BlackBerrys were the thing. And Motorola flip phones. Nokia flip phones as well. So people went from, a simple flip phone to texting, calling, searching the web on a browser, playing games and listening to music all on one handheld device. If someone invested $1,000 in Apple when the company went public in 1980, that investment would be now worth $2.6 million. What's next for Apple is a big question. They've got 2.5 billion devices out in the wild right now. That's pretty impressive. FDA has approved Eli Lilly's GLP-1 pill, opening the next phase of the weight loss drug market. I saw an interesting study that I read this weekend, and it's the first time I've thought to bring it up with you. It was tied towards, there's now mounting data that GLP-1s can be used to fight alcoholism, to fight drug addictions. Now, Lilly and Novo Nordisk might be wise, and this is what the analyst was suggesting, just delaying asking for approval for that, even though Novo Nordisk was just approved for heart disease, I believe in the UK. And that will add another 1 million plus people to potential prescriptions. This is wise for them to delay on the addictions issue, because let the losing weight thing play out. Let the improved cardiovascular fighting disease work out. And when you need that trump card, you can lift it out. But the other thought here is, man, that's kind of bad if your dad's an alcoholic and he could really use that pill right now. Or your son is into things that aren't good for you. Drugs, because drugs are bad. Stocks making big moves today include Hasbro. The toy maker fell more than 4% after it disclosed a cybersecurity incident where there was an unauthorized access to the company's network. Hasbro has taken certain systems offline and is currently conducting an investigation. That's why you buy cybersecurity stocks, in my belief. Eli Lilly, the Food and Drug Administration approved Foundayo, the company's once-a-day GLP-1 drug. I wanted to bring that up. I just did. I had not known the name was Foundayo. So it's Foundayo. Making up these words. Oof. Shares up 4% on that news. Philip Morris International. The shares dropped 5%. Reuters is reporting the FDA delayed authorization for sales of nicotine pouch products as agency scientists grew concerned about potential risks to new users. Cal-Maine, they're an egg producer. They're up 5.8% following its beat on both the top and bottom lines. Cal-Maine's third quarter earnings came in above expectations. They came in at $1.06 versus 70 cents. That's crushing it. Don't say crushing the eggs. Dave & Buster's up 20% after management said the company expects an increase in same-store sales, revenue, and adjusted earnings before interest, tax, depreciation, and amortization during 2026. My kids love going to that place, and they drop money. It's almost like worth moving away from, if that makes sense. Hey, I'm out of time for today. I have a busy morning. I will come back for the afternoon wrap-up podcast. I do want you to sign up while you can for the Pints and Portfolio, April 18th, 11:30 to 1:30 in Sunnyvale, California. That's right. I know where I'm going to be. That's April 18th. It's coming up. It's going to fill up fast, so sign up at robblackshow.com.
Join Rob Black in Sunnyvale Saturday, April 18th for Pints and Portfolios, a less formal event at a local watering hole for those close to retirement with $500K or more in investable assets. Drop by from 11:30 to 2 for a little sunshine and a complimentary preliminary financial plan from a CFP that Rob trusts at EP Wealth Advisors. Whether you're on the road to retirement or already there, this preliminary plan can provide you with a second opinion analysis of where you are and highlight areas for improvement and opportunities for growth. That's Saturday, April 18th in Sunnyvale. Go to robblackshow.com and click the Events tab. Find Pints and Portfolios and click to register. You'll answer a few simple questions about your situation, and your confirmation email will provide all the details on the location of this Sunnyvale event and how to schedule your preliminary financial plan. Space is limited and registration is required, so go to robblackshow.com today. That's robblackshow.com. Investments not FDIC insured. Past performance does not guarantee future results. Not an offer to sell or a solicitation to buy any security. Member FINRA SIPC.